Good morning and welcome to today's webinar hosted by Make UK, NatWest and Lombard, discussing a recent report about access to finance in manufacturing. Before we begin, please note that all attendees are in listening mode only and the panelists have full video and audio functions. If you wish to ask a question, please type it into the Q&A tab at the bottom of your screen. We do have time later in the webinar where we will be responding to your questions. So please do, as the webinar progresses, post your questions in the Q&A tab. Today's webinar is being recorded and we'll share the video with everyone after the event along with a link to the report. And now I'll turn over to our chair, John T. Bloom. John T.
Thank you, Carolee. Hello, everybody. I'm John T. Bloom, a freelance journalist with 40 years experience of reporting on business and economics, 30 of them at the BBC. I'll be chairing this webinar, which is based on the latest report from Make UK called Finance Opening Doors to Investment in Manufacturing, published in partnership with NatWest and Lombard. Joining me today is a stellar cast of experts. We've got Fahim Khan, the senior economist at Make UK, Laura Kappa, head of manufacturing and construction at NatWest, Ian Isaac, managing director at Lombard, Helen Doughty, joint managing director of SHD Composite Materials, and Mark Swift, director of SME engagement at the Warwick Manufacturing Group. But first, let me say that this is probably the best timed webinar in history. The new Labour government is desperate for investment, government investment, local council investment, foreign investment, and investment by you as well, British industry. The new Chancellor made it the key point of her first major speech only 2 days ago. And with that in mind, we have a question for you to answer. How aware are you of the potential funding opportunities available to manufacturers? Are you very aware? You know the options are available and the next steps. You're quite aware. You know what options are available, but you're unsure of the next steps. You're barely aware. We're not sure what options are available or the next steps, and not at all aware. You don't even know where to start. The second point is that you're knocking at an open door. This survey is anything to go by. To illustrate that point, I've got another question for you, the audience, which you can have a bit of fun with guessing, or if you've read the report, you'll probably get the answer quite easily. According to this research from Make UK, NatWest and Lombard, UK manufacturers could boost their own investment by how much if they were to take advantage of the range of public and private financial options available to them already? By 10 million, 1 billion, 5 billion, 10 billion, or 20 billion? The answer will pop up on your screens. Remember, this is money that's already out there, waiting for you to take advantage of. Not the new stuff the government's hoping to push your way, not new tax breaks, not a new economic environment with new bodies and new funds. This is just ready for you now. So if you have any questions for this panel of experts, please send them in. I will put them to them at the end of their contributions to this webinar. But we're going to start off by going first to Fahim Khan, senior economist at Make UK, who helped write this report. Fahim, can you tell us a bit more about the research, what it tells us, the importance of finance in unlocking investment to support and help the sector and the UK economy to thrive?
Thank you, John T. And good morning, everyone. As you say, it's an incredible time to be hosting this webinar just as we got the results of the new government. I think it's a perfect time to use the insights of the research to make sure that access to finance is a priority for the new Labour government. And the report reveals to us a number of interesting ideas. Some of it wasn't so surprising when you think about what manufacturers are and what they do. For example, the main reasons that businesses use finance was to invest in capital equipment, which is true for about 62% of manufacturers, followed by investing or covering day-to-day working capital cash and investing in innovation. And there are plenty of other reasons too, but those are the three main areas in the survey. And that was also reflected in the type of finance that manufacturers also preferred to use. Often most manufacturers preferred to use asset finance, which often is the gateway to accessing capital equipment investment, debt finance, subsidies, which often supports innovation in the UK. But we also found certain types of finance like invoice finance, like trade credit. They weren't so popular in the survey, which we found quite interesting because those sort of financial products can give a lot of flexibility to businesses, especially if they need cash quickly or if they've got irregular order books. And this is where we started to consider, what is the main kind of theme of this report, maybe considering awareness as a potential issue within access to finance. And what could we achieve if we improved access to finance and awareness of access to finance? We certainly saw that issue persist in the survey when it came to diving into public support, and I'm sure we'll talk more about that later on, where many businesses, manufacturers were unaware of support like Horizon Europe, like the British Business Bank, like Help to Grow schemes. So we cannot underestimate the value of finance to manufacturers. And I think manufacturers know finance is important to them. Particularly one statistic that stood out to me was, nearly 3/4 of businesses say they would have invested less if they never had any access to finance in the last 12 months. And I think that's a really important stat to say that a lot of businesses recognize finance as an important enabler to achieve their ambitions. Now, looking to the future, what we found in the research is that businesses intend to invest in capital equipment and innovation, and they're going to need finance for that. But a sizable or growing share of businesses are also believe they're going to need financial support to invest in robotics and automation, in energy efficiency, in skills and training, in cybersecurity. And our analysis shows that if we were to enable businesses to access finance, that could generate billions of pounds of additional investment. I think I saw on the polling results that most people, I think guessed, or the largest share guessed it correctly, it was about 10 billion pounds of additional investment over the next 12 months. I mean, that is, in the grand context of total investment in the UK, 9.6 billion pounds, whatever it is not huge, but it's sizable enough that certainly government should look at it more closely and think, okay, what do we need to do about access to finance? It is very alarming. And I'll finish on this point so I can give some of my esteemed panelists an opportunity to speak. If we are going to be solving any of these society's challenges, like achieving net zero and improving our stagnant productivity growth, then we need to tackle this kind of disconnect between the finance sector and the business sector and find a way. And this is what this report is about finding a way to link those two areas up together more closely. Thank you, Jonty.
Thank you, Veen. Very clear. Now to Laura Capper, you're head of manufacturing and construction at NatWest. Can you tell us how you see finance unlocking opportunity for this sector?
Thanks, Jonty, and good morning, everyone. So I guess just to build on what Fahim was talking about there, I think using finance is a tried and tested method to help businesses achieve their ambitions. And the research in the report tells us that. So 70% of manufacturers said that without access to finance, either some or all of their investments just would not have happened. And interestingly, a further 87% of manufacturers said that they need access to finance to help fuel their ambitions of investment over the next 2 years. So the benefits of improving access to finance, as Fahim was saying, could be really substantial. And I think it's fair to say that the challenging environment that manufacturers have had to operate within over the last few years, that VUCA landscape, as we call it, so that volatility, that uncertainty, that complexity and that ambiguity, has meant many businesses have had to adapt and had to pivot, whether that's reviewing business operations, looking at how to reduce costs, looking at additional product lines. And whilst businesses often manage their day-to-day operations effectively, leveraging finance could actually boost that effectiveness, particularly for working capital needs. And often finance solutions can be tailored to your business requirements. So just to give you an example of this, if your debtors are growing or your stock's increasing, that could lead to a strain on your cash flow and could then hinder your ability to pursue new opportunities for fear of not being able to manage the cash that could be absorbed in doing this. So working capital solutions such as invoice finance, which looks at your debtors, or asset-based lending, and ABL as it's better known as, that looks at your stocks or inventory, can provide you with that necessary funds to capitalise on these opportunities. So you're able to unlock the investment that those assets of the business can bring. And often those potential benefits then can outweigh the funding costs. I think the other thing finance can help facilitate is clearly expansion, and that could be in the form of international expansion, and that can be done twofold. So it can help you mitigate and reduce some of those risks of trading internationally, but on the flip side, it could also help you negotiate more favourable terms with new suppliers that you may be trading with abroad. And then lastly, finance could potentially help you to lower your ongoing business costs in the long term. So if you're investing in new, more efficient, more productive equipment that can reduce your operating costs or increase your production speed. Or it could be that you're investing in renewable energy to help lower your energy expenses and to mitigate against a volatile energy market. If funding that investment can help you reduce your ongoing costs on the long term. So I think it's really important that manufacturers are aware of the support that's available to them so that they can plan effectively and comprehend, I guess, the benefits that such investments can bring.
Excellent. Thank you, Laura. Now to Ian, you're at Lombard, and we all know manufacturing is a capital intensive business. So how can lenders like yourself help with the opportunities that investment and capital expenditure may be able to unlock for them?
Yeah, thanks, John. Good question, and morning, everybody. Yes, my name is Ian Isaac. I'm the Managing Director of Lombard. What Lombard does is provide asset finance to UK businesses, SMEs and corporates alike. That's all we do, and we believe asset finance is a product specifically designed to underpin the growth of businesses. It's a real accelerant. What asset finance is essentially, I liken it to people buying a house with a mortgage. People don't wait all their lives to save the money to buy a house. They save for a deposit, and then they take a loan secured on the house in order so that they can then grow their family and get on with their lives. And asset finance is the equivalent. A business will expend money on an asset to underpin its growth and trajectory, and the lending that we make to fund that asset is secured on the asset itself with no other ties or no other collateral. So it's a very simple, straightforward product and critical for capital intensive businesses, essentially in the manufacturing sector. Our industry of asset finance delivers new lending to the British economy around 40 billion of every year, and that will be equipment, vehicles, plant, technology, energy efficiency investments, and of that about 23 billion goes to SMEs. So it's a critical lifeline for so many businesses, but only about 4 in 10 businesses actually use this type of product, and many cite either risk aversion or lack of appetite to take on debt, but others simply that they're not familiar with the product, not familiar with how they go about accessing it. As Laura and Faheen have already commented, what a manufacturer is investing in right now. So, many are refreshing obsolete and out of date equipment that needs replacing. So they're just replenishing and replacing old equipment. Many others are driving investment into much more efficient, energy efficient or efficiency in terms of the cost of running the equipment in terms of resources and people and energy in order to run the equipment. Much more investment is then going into how do I serve my customer, how do I open new markets and deliver new products to customers, and that's where our product really comes into its own. We're seeing huge amount of demand for equipment that underpins robotics and automation in manufacturing processes, and they are complex, difficult projects for businesses to get their heads around and understand the return on investment. But again, we believe asset finance is a terrific product to underpin the growth in automation and robotics. And again, we'll come on to that probably a little bit later in the session.
Yeah, thank you, Ian. Now to Helen, you're actually at the coalface, so Joint Managing Director at SHD Composite Materials. Now, can you tell us how finance has helped your business to unlock opportunities and what benefits this has provided to your company?
Absolutely, thank you. Hello, everybody. And yes, I think for our business and within the industry we sit, we work with composite materials, which is a very high growth industry. It's very much about lightweighting and accessing new technologies. So we've seen substantial growth really from day one, and our relationship with the bank has been absolutely key to this. So we have the working capital that we access through invoice financing. And then we also buy a lot of capital equipment, which has expanded our technology and our capabilities, which we've used the Lombard for. So the relationship with our bank manager has been absolutely key from day one. It's really great actually that the whole company see him as part of the team. And I think having that has been absolutely key to having that understanding about where the business sits, what the growth potential is, and the best finance that we can use to access that. So the working capital for the daily business, the growth, I mean, we sort of grow sort of annually at least 20% a year. So that working capital has been nailed through the invoice financing. then the expansion of our technologies has been key to getting test equipment, which we've used Lombard for on numerous occasions. And that's absolutely been able to compound the growth, that we've been able to expand our project range, that we can liaise with new customers and new technologies. It's a very great industry to be in. There's a lot of fun and it's very exciting. It's constantly developing. And so we've been able to enjoy that because the finance side of it's been nailed. And they're also very keen on making sure they're aware of new opportunities. And as I say, preempting is a real key factor, I think. We have also expanded globally, which certainly wasn't in the business plan when we first set up. But as a result of Brexit, we opened a manufacturing plant in Slovenia. And then also through demands of the sort of composite sector that we're in, we've opened facilities two now in the US. And this has all been compounded by the strong base that we have in the UK. The fact that we've got the financing nailed, the fact that it's given us the flexibility to make these business choices has been absolutely key. And I think having that awareness and not being frightened to use it, you know, the bank's there, as Lombard's there, and it's being able to access us and utilise them. It's a key part of what we do. And then I will also lead into what Mark and the team at WMG do, which is accessing sort of the R&D element. So they have equipment that we've used in the past to run trials on, see if that works, looking at new technologies, and also working with the grant-based funding, which they are very keen in supplying. So it's literally, I guess this is why I'm here, because it's a good example of accessing all these different ranges of finance that have enabled us to grow exponentially over the last 14 years, and has been key. But my biggest advice is it's out there, use it, you know, and it is such a key to growth. It's made us where we are today. So.
Excellent. Thank you very much for that. Now, that brings us on very neatly, Mark Swift at the SME engagement at Warwick Manufacturing Group, to one of the biggest things that was raised in this survey, is that there's a lot of stuff out there that people just don't know about. I mean, it's been there for an awful long time, but it seems to be rather complicated and difficult to get hold of. How do you see the programs and funding across the public sector playing a role to ensure other manufacturers can benefit, in addition to those that already are?
Hi, good morning, everyone. Yeah, I mean, I think our role is really helping businesses know where to aim, really, recognising perhaps we're not all Jude Bellinghams and know really where to fire the ball. We have access to a whole range of different equipment and different people, really. The key bit, really, I think, is what we're here to do, I think, is how do we de-risk and accelerate your investment? And in particular, how do you de-risk and accelerate innovation? Access to new ideas. And why is that important? Why is that investment important? Well, we know in the UK, for example, that we have roughly about 100 robots for every 10,000 employees. If you look at states such as South Korea, it's about 1,000 robots per 100 employees. If you look at maybe comparable countries, maybe such as France, they've got twice the level of robots, or 3 times as many robots in Japan as they have in the UK. If we were to unlock that, we believe that productivity in the UK would go up by 1/5 in the manufacturing sector. So it's a big deal. It's really important to us, I think. The role of us is to help you access the new technology and ideas, and that might be, you know, an initial, maybe quite a small step, maybe to which might be a project which could be from start to finish in a month, or it could be something that's over a number of years, really. But it's about getting you on that journey. We spend an awful lot of time helping businesses at the moment, for example, putting digital backbones in companies. So putting new digital infrastructure in, which then enables them to go into the next stage of more advanced technologies such as robotics and automation. So really about that journey, understanding your challenges, and then taking you further down the road, perhaps that you won't be able to do by yourself, which ultimately de-risks what you're trying to achieve.
Excellent. Thank you very much, Mark. Let's move on to the next kind of area, which is more about building awareness. And the first question, I suppose, should go to Laura at NatWest. How has finance and wider support become available for the sector, and how has that evolved over the last decade, do you think?
Yes, I think the funding landscape is developing rapidly, especially for SMEs who now have a wider range of financial options that are available to them more than ever. And that's largely due to initiatives such as open banking and just greater use of digital technologies. But also customer needs have changed, and so funding solutions have had to adapt to support those. And I think we recognise as a lender, it's not just about the finance that businesses need support with. So before manufacturers even get to that point, they might need help to understand how they can grow, how they can decarbonise, how they can digitalise. And so it's actually the steps before investing where solutions can be most crucial. So when manufacturers do invest, they are much more informed and they're in a better position to make those decisions. So just to bring to life how some of that support then has evolved. So when we saw the energy crisis hit 2 years ago, we saw many businesses look to see how they could reduce their energy costs, but many weren't sure on sort of what actions they could actually take and what would those savings actually look like that could be made. So we work with a number of partners where we developed a number of free digital energy support tools which can be accessed by any business for free, to try to allow you to better understand when those energy costs could be saved, but more importantly, the practical steps that you could take to go about making those savings. So, for example, we teamed up with a company called Purse who provide an energy analytics tool where you can literally pop in your postcode and within 2 minutes you can get tailored recommendations where you could save energy on your building that are benchmarked against other businesses of similar size and nature. So using that sort of data, using that satellite information to give you that informed decision and view on where you could take those steps. We also sell, many businesses, particularly manufacturers, looking to invest in renewable energy, particularly in solar panels. But again, our customers were telling us, they weren't quite sure what options they could take, whether their roof space was applicable for having solar panels and what that return on investment could be. So again, we can provide the funding mechanism at the end of that to fund your solar panels, but how can we help you get to that step where you're making that informed decision? So we again partnered with businesses that can give you that support to look at actually that, yes, your roof is suitable. These are how many solar panels you'd need. This is how much it would cost you, not just for the panels, but for installation. This is the payback period, but also some credible suppliers that you could work with to then go about making that installation. And then finally, we saw that voltage was being wasted by many businesses as well, particularly in this sector where it's energy intensive. So we partnered with a business called Emisys that can provide a free assessment on where you could be wasting voltage across your business, and so where those savings could be made. So I think by utilising those tools, firstly, it can save businesses the time and effort for doing that homework and doing that research, particularly if you're a small business, you don't have that resource to do that. So we've done some of that homework for you, and you can feel confident that you're then working with credible and trusted partners to determine that best course of action. And that assurance then helps businesses with their investment decisions, knowing that the available funding solutions are also there to support them. So I think, that's how, just some of the examples of where not just funding's involved, but actually the wider support that's available too.
Excellent. Ian, do you have anything to add to that about how things have changed in the last decade?
Yeah, just a couple of other points. I mean, I absolutely echo Laura's points around investment in renewable energy, and certainly, 10 years ago, mainstream asset finance lending into biomass, solar, onshore wind was difficult to get away. Unproven technology, unproven benefits, and often it was underpinned by government subsidies at the time as well, which was the only way these things could get going. All of those, that transition to renewable energy and the benefits for businesses on their net zero journey and cost of energy, I mean, they're now well trodden paths, well proven technologies, and therefore that's become mainstream investment, mainstream assets for the asset finance sector to finance. I think just a couple of other areas. One of the other big trends we've seen in the last decade is businesses, because technology is advancing so quickly, businesses are often reluctant to buy outright new technology, new equipment, only for it to potentially be obsolete within a very short time. So we're seeing the innovation of new products where actually we call them as a generic as a service. So instead of buying an asset or a product, a manufacturer will just consume a service. And we've seen that hugely scale up in the sort of technology market, digitalization market. And we partner with a company called Rigby Capital, whereby using their expertise, we can offer customers the ability just to consume technology. So our partnership allows businesses to procure assets, use assets, then dispose of assets. And obviously this underpins circular economy and environmental benefits of the way equipment is disposed of. So lots of benefits, but all effective for a fixed service price, rather than the business themselves actually having to invest and then take the obsolescence risk. So we've seen a huge scale up in that, and we think, you know, to Mark's point around further digitalization of businesses and digitalization of processes, we think much more of that will progress as businesses look to accelerate and grow, particularly using AI and the like, which is again really technology dependent.
Excellent. That's a very good point. Now, if anybody's got any questions they want me to put to the panel, please do send them in. We will ask your questions for you, but we can't do it if you don't get in touch. But Mark, just going on from exactly what we heard there, how has funding and support from the public sector evolved recently? I mean, has it adopted to reflect those changing businesses needs we've been hearing about, energy, digital, AI, and the evolving landscape?
Yeah, I mean, I guess the short answer, it has evolved considerably, really, and it continues to evolve and change. It's still extremely complex. I mean, I think we've got to be absolutely honest about that. There are so many different programs. I mean, if I look at the automotive sector, for example, there's about 140 programs available just for the automotive sector. The good news, though, and it will continue to evolve with the new government. We know that there will be a further reliance on the regions. So the role of the region, of your local partner, your local university, your local catapult center is going to be more and more important, I think. But the good news is the catapult centers, high value manufacturing catapult centers, are absolutely stable. We've been now, I think we're in our 12th year. We've got a plan till 2030. So, you know, we're not going anywhere, which is really important, I think. We are geographically distributed. So we've got centres all across the UK, whether you're in Scotland or in the southwest, and then we've got satellite offices in Wales and in the southeast, etc. We're really well distributed. So although it continues to change, you know, we are there to help you to help access the support. There are national programs also appearing. So another shout out to other catapults is the Made Smarter program. From next year, that's going to be rolled out nationally as well. So I think that's also a big deal for us. In the very least, that helps give businesses a second opinion on perhaps what they're doing about digitalization, and maybe help you, or the other extreme might even help you start your journey. Create a strategic plan and maybe put those digital backbones I spoke about earlier, ultimately going to a level of automation or using 3D printed additive manufacturing for the first time. So lots of national programs are appearing as well, which are important, but extremely complex. Don't worry about the wiring. Use the catapult centers. That's what we're here for. Find a local partner, find a local university. You know, we're only as good as who we collaborate with, I always believe.
Excellent. Those good points there. And Helen, from your point of view, we've heard about your expansion and everything, but how has the funding and support changed? I mean, has this really helped address your needs?
Absolutely, and I think it's really key. And going on literally from what Mark's just been saying as well is that as when you're sort of a young growing business, it can almost be off-putting thinking that you've got to jump through hoops and how do you access that finance. And actually, it's so key. And as you say, there's at the very start, there's huge pots there that are available. And I think once you start liaising with the universities, liaising with the catapult centres, and also with the finance providers, and get a clearer picture of what finance is available, what's the best use for your business at that time, and then sort of get on this sort of the trail of accessing it. And it's not as daunting as a lot of people may think it is. Yes, there's forms to fill. Yes, there's a few hoops to jump through. But once you get into that mentality and realise how much you can make it work for you, it's fantastic. And then again, once you've got that growth in place, supported by the finance, you can then sort of have people who are focused on it within your own business. And I think that it's all very much sort of chicken and egg, isn't it, of what you need to do when you're focusing on that growth. And it has evolved very much. Sort of the accessing for the Lombard and the way that they can turn around and support you in many new ways as to, again, from when we first set up. Again, it's finding that best solution. And can't say strongly enough, working with the universities and the catapult centres, when you're in a developing business, and all businesses can access this. You know, when we talk about us being in a highly technical sector, it does apply to all businesses that are there. It's just finding that person to speak to. This is the scheme that's best for you, and to get that up and running. And once you're on that path, it's fantastic, and it's been instrumental to us for the growth that we've done. Thank you, and hopefully this webinar will get more people pointed in the right direction. So finally, I'm going to come on this subject to Faheen, and this is a difficult one, because, you know, there are lots of long-term needs for manufacturing and the funding and how it will change and everything. But I'm just going to say to one thing, which is, what will you be knocking at the new government's door to try to persuade them of what needs doing? And if so, what will you be telling them about what the needs for the future are?
Well, certainly, of course, I'm paid to knock on the government's door, so I'm definitely going to be doing that. We know from the the manufacturer's point of view, in the survey, their long-term needs, investing in energy efficiency, in robotics, cybersecurity, all these different things, skills. And of course, the survey only looks 2 years ahead, but we need to look beyond that. And I think we do need to start, and whilst it's not specific to access to finance, but Labour has been quite promising in their indications of introducing an industrial strategy, and actually access to finance would play a role within a long-term industrial strategy. I think what that will do is, first and foremost, and one of the findings of the research was, confidence and the economic environment has an impact on a business's willingness and ability to access finance, and actually a long-term vision for the industry, for all industries, which Labour's plan is not necessarily specific to manufacturing, but all industries, will instill some more confidence to help businesses and the lending sector to engage more with each other. And I think what will change in that, and what we would like to see change, and how the two areas need to kind of maybe perhaps adapt, is moving away from, I think we have this kind of modular short-termism when it comes to investment. It's like looking at robotics, it's like, let's buy one robot and see how that goes. Let's put in 2 solar panels and see how that goes, and then we'll buy more if it works out pretty well. And actually looking beyond that and increasing and expanding on the scale of the projects, taking on more riskier projects. And when you have confidence, you'll see businesses more willing to take on larger, riskier, bigger projects. And when the desire for those projects increase, you'll also see the lending market adapt to those needs and actually start to provide finance to enable those projects. So certainly from a policy perspective, and now that I know those are not the specific policy ideas, because of course we can think about things like capital allowances and R&D tax credits, and how government uses the tax system to kind of enable this on the other side. First and foremost, having that plan, and then changing the way both of these two groups of people, the businesses and the lenders, interact with each other. And of course, Helen talked a lot about, bringing all the different organizations, expanding the scale. And if we're going to be competing with countries like the US, and how Mark mentioned on the South Korea, I mean, it's insane that we are below the world average for robotics or adoption. We're the only G7 country that is below the world average. It's, something does need to happen there, and we just need to be bolder about it. And so that's certainly the start for 10, and certainly what we're going to be telling Keir Starmer's Labour Party over the coming years or so, and we're going to be very much focused on that.
Excellent, thank you. I'm sure Make UK will be at the forefront of that. I just don't understand why you don't just buy one robot and use it to make another robot, but I'm not an expert in these areas. Yeah. Now, let's move on to access and support. So this is for Helen at SHD Composites. For your view, how can the access to finance be improved, and how can we foster a better ecosystem of support for companies like your own and others?
I think that's a very good question, and I think it's getting that mindset of manufacturers that it's out there and they should access it. I think sort of from our point of view, we've always had as a key point that this whole access to finance. This is the point where I talked to say my dad was actually a bank manager, so it's kind of in my DNA. So it's that whole being able to access it and see them as a key part of the team. And I think once people realise that and adapt that and sort of have that relationship, and again, as Veeam just said with Make UK, you know, we are members of Make UK. It's a fantastic sort of institution that you can use as much or as little as possible, and we use it on all sorts of elements, not just from that whole political side of view. We use it for HR support, legal support, everything like that. So again, it's just getting that messaging out there that there are so many facilities available for finance and support, and it's just getting sort of manufacturers to stop, pause, you know, see what's out there, and not be frightened to pick up the phone and say, look, we're here and we need you, and to start developing those relationships very early on, because it just makes the absolute world of difference. It doesn't make finance a daunting prospect. It just makes it part of your daily life, and part of your growth plans and your forecasting. And I think it's getting that mindset out there that there is so much support, and sort of the UK manufacturers just need not to be frightened to use it or put off by using it at all. They should sort of go out there, and there's so many different options available, and utilise all these teams that are out there to make it happen.
Yep, you got to take advantage when you can. And Mark at WMG, this comes on to your expertise, really. One of the suggestions at the moment is to improve access to public sector finance, just to create a central government portal, so it's all in one place and everyone can see it and they know how to use it. Do you think we're going to get that, or how else do you think we could improve the way manufacturers access public sector support?
I mean, you'd think we'd be able to get that, you know, with all the digital technology we've got now to bring all it together in one place. You think that would be possible? And you can see the transformation that's happened in the insurance market, where we all go onto our comparison websites, don't we, and find the right solution for your organization, for your own purposes, I guess. I would love to do that. I think would be a real benefit. I think, just to flip the question around a little bit though, Jonty, if you don't mind, please feel free to flip me back, is that I think it's really important that when businesses come to us, that they are ready for other support. So ready for us would mean that you've got a plan, you've got a strategic plan, you've got ambition, you know where you want to go, or if you've got a rough idea, we can certainly help you develop a roadmap or strategic plan. The timing is right for your business as well. These things are only got as much time you can put in, and we know that this real challenge in small businesses, and I completely understand it, really, is that you challenge between the grip of today and the ambition and the of the future. And then finally, we are in your sweet spot. We have to be in the sweet spot for you. If we're not, we can't do what you're asking. We'll find somebody else. That's always our sort of mantra, if you like. But the timing, it's a two-way thing. We've got to be right for you, and you've got to be right for us, I guess, in terms of how we can help each other.
Excellent. Now, Ian, how does Lombard, your expertise at Lombard, how do you see this one going? Is this an open goal for the government? If they just got everything together and got the information out there, it would all be much better, or is there something more that the bank thinks needs doing?
No, I mean, I think the creation of the National Wealth Fund and all the various schemes being announced so soon after the conclusion of the election are all really positive, and I think that the challenge for a bank as a lender is how does the government's investment get matched pound for pound or multiples of pounds by the private sector and lending from banks. So our bank has been party to lots of the discussions, both pre and post the election, and we feel we've got a huge role to play, and certainly Lombard as a growth vehicle for businesses got a massive role to play within the NatWest Bank on this. From my perspective, just echoing some of the points that Helen made, that we're a relationship business, and we put people in front of people and build trust and build relationships. When banks and asset finance businesses lend money to customers, they're effectively assessing the ability of that business to pay it back, and that's the primary assessment being made: is can this business pay it back? Now, we'll take a view it can either pay it back because just look at what's happened in the past. These free cash flows are available to service debt. It's done it in the past, so it can do it in the future. When a business is sort of transforming into real growth mode and investing in some innovative technologies or equipment or trying to get into new markets, then the onus on the bank is not to rely on the historic cash flows. It's to actually go, well, what future cash flows will be generated by these projects and these investments, and will that allow us to be paid back? Now, obviously, the more closely we've got a deeper relationship and are working with that customer, the more confidence we can build on those plans. And as Mark said, it's, have the businesses got really thought through the risks of their investment, got a really detailed plan, and really close to the payback period and the returns on their investment. Because the closer we get to that thinking, planning, the stronger the trust is with the principles of the business, the more likely we are then to support it. And my other point will be, as we explore automation and robotics and AI and technology investments, the stories and the use cases that come to life from that, and the evidence that businesses that do these things go on and grow and succeed, that just builds further confidence in the lending institutions to go, we've seen projects that look like this, we know they work, and therefore we'll proceed with this lending as well. So that's my perspective, Jonty, on that.
Thank you. Now, Laura, I mean, banking is all supposed to be about relationships. If anyone listening to this has a bad relationship with their bank, I assume that you at NatWest can provide them with a better one, can you?
Of course. Now, I mean, in all seriousness, this is it doesn't matter which bank you work with. As Helen said, it's just about having that relationship and having that access. So, I think for me, building on what Helen and Ian have just talked about, it's about that transparency. So it's being really clear with what you're trying to do and where you're trying to get to. And that's, really important across all key stakeholders, whether that's your lenders, whether it's your accountants, your solicitors, other professionals that you work with, but also actually your colleagues, so that everyone's buying into what that long-term vision and plan is. And I think by taking that collaborative approach, that's really key. And as lenders, if we know what your end goal is, whether that's to grow your business, it could be to sell your business, it could be to acquire additional premises, then we can tailor the right solutions and support to help you get there. And I think, lenders have a great opportunity to use the scale of our customer bases that we support. Across NatWest, we look after 50,000 manufacturing businesses, right from startups to large corporates. So it's very likely that a similar size business has a similar ambition to you, or there are other businesses that have already gone through that journey that you're about to embark on. So using our knowledge and our insight of how we've been able to support those businesses achieve their strategies and succeed with them, we can then ensure that businesses not only leverage the funding options that are available to them, but actually the expertise that we can garner from supporting with that. And again, that includes bringing in the whole of the ecosystem. So it is signposting the support that's available. It's a team sport here. So, we have access to a number of great external stakeholders across the manufacturing sector, including the likes of Mark at WMG. So, we can play our role of signposting that support, whether that's to seize an opportunity or, to overcome a potential challenge or solve a problem. But I think as well, going back to sort of Ian's points there, we have a responsibility as lenders to be really transparent back. And that includes ensuring that we're really clear with how we assess a lending application, what we're looking for, what we need you to provide to us. So I think that's really, really key to help improve the access to finance for everybody.
Thank you, Laura. Finally, Faheen, I assume you've got some more to add on this, but principally, what would you and the other members of Make UK like to see the new government do to improve access to finance?
I think certainly based on the results from the awareness of public support, we do need to tackle that issue. And it was already kind of, we discussed it a little bit already, but I think from a Labour government's point of view, in terms of how they, and actually it's not the government that's always necessarily in charge of, let's say, the marketing budget that the BBB would have or the catapults would have. They have to own strategies about how they reach out to businesses, make connections with organizations like Make UK. And I certainly think that the government can play a role in mandating these organizations, which are public funded, partly public funded often, to do a better job effectively of reorganizing and reaching out. And one of the things we can look at, I mentioned this actually a couple of years ago, we did some research on startups and scale-ups and how, and HMRC is obviously massively under-resourced to be able to do this right now. So the solution first would be give them more resource to do this. And then what you need to do is look at data like PAYE data, which shows you which stage of the business's life cycle they're in. For example, if you're going from a business with 249 employees to 300, you're like, slowly becoming classified as a large business. At that point, you might be a business who's starting to look for growth finance, who's starting to look for investment in robotics and energy efficiency. But actually, if you reach out to that same business at the start of their life cycle, they might not find those sort of funding mechanisms appropriate. And so is there a way that we can be more creative and more targeted in our approach? And so that's not an easy ask, because I think the Labour's current approach is perhaps maybe to reduce investment in department spending, and so that might not go that way. But our first ask would be, to improve that targeted approach. We need to look at how do we use the data we already collect as a nation, and use it to target. And we can do things with like AI and big data, and it's already there. We just need the right tools to do it. Furthermore, I'm looking at more kind of the tax relief point of view. Of course, capital allowances, full expensing, these things enable and support and work with finance from the lending side, from the public sector side. They all work together as one. We look at full expensing capital allowances. We certainly think that, yes, expanding to the leasing of capital equipment would certainly be a benefit to businesses. And most of our members tell us that it would help. It would first and foremost give them more choice, so they could choose whether or not buying or leasing is a better choice for their business, rather than being told by government that they should buy if they need to use a tax relief. The second thing is about clarity of use. I had a very interesting discussion with some of our members on how difficult, who were completely unaware that you can use capital allowances with software investment, as long as the software investment meets a certain criteria that it is can be treated as a purchase of capital equipment. So if you buy a license for a new software package for, let's say, 3 years, that's like capital equipment. A table of some of our most active members that we had a committee meeting with, and not a single one of them knew that they could, and none of their accountants knew that they could use capital allowances with software. So there needs to be a dissemination or education of existing government support. This doesn't require creating new pots of funding from government. This doesn't require new investment from government. We've already got the tools. You just need to explain to businesses how to use them properly. And it's the same with R&D tax credits. Of course, it's a very complicated system, but manufacturers love it. They all use it. The previous government took some steps to simplifying that by combining different programs. But certainly we think that we need to recognize who actually does R&D in the country. It's not often always the large, big OEMs. Often it's the SMEs in manufacturing that are, I guess, some might describe to be the incubators of ideas in the UK. And really, we need to ensure that these sort of tax reliefs support SMEs, which also often kind of filter upwards and support bigger businesses. So certainly introducing enhanced deductions, for example, on those priorities, the robotics, the energy efficiency, the cybersecurity, the training and skills, increase the support to enable those areas of investment, because that's where manufacturers want to be. We need to support that. So those are some of the areas that we would look at from a lobbying perspective. Capital allowances, R&D tax credits, and the HMRC thing is that point extends to so many other issues, not just the one that I described, but they are massively under-resourced, but have so much data that they could use to help businesses.
Thank you very much, Faheen. It reminds me of a problem I came across in France once, which is, if you had 49 employees, you didn't need to follow the rules, but if you had 50, you did. And so there was just this every company had 49 employees. And if the government had looked at the data, they would have realized that, if you want SMEs to expand, you've got to make it smooth, and they didn't do that.
Exactly.
Anyway, so we are coming on now to the Q&A. If any of you have any more questions, do please get in touch. We have one already from Linda Bradbury, which is 2 questions actually, and I think probably Mark is probably the best person to answer this, and it won't take him very long. She says, is there a link to energy saving services, and can we recommend companies that specialize in energy savings and solar panels and so on? I assume we can very easily at Make UK.
Yeah, absolutely. Yeah, the short answer, I guess, is you can go to I don't know where Karen is based in the UK, but sometimes often better to use the local centre. So the short answer is go onto the High Value Manufacturing Catapult website. Just Google out the first top link. We work with a whole range of technology providers. We have to be very careful. We won't recommend, but we'll give a list of businesses perhaps who could offer some support, because we have to become, as an organisation, we have to be neutral.
Excellent. Thank you very much for that. I've got a question actually for Helen. That I've been going on about this for years, about the apprenticeship levy being, not very successful, and the sort of falling number of apprenticeships. Do you think reforming that would enable companies like you to expand and train more people as well?
Definitely. I think what we found here is we don't run an apprenticeship scheme here, but what we do is sort of send members of staff onto, we call it the day release, accessing the local universities. We have worked with the local colleges to have a look at what sort of apprenticeship schemes would be suitable for our sector. Where we are based geographically in Lincolnshire, we're the only kind of person who's doing what we're doing in this area. There's lots more clusters throughout the country, but certainly getting the kids to come from school, a lot of them now don't necessarily want to take the university route, and we've had some really successful students come to us who 10 years later are still with us, who we've personally, as a business, we've funded them going to local universities. This has been really good for cementing the relationship with sort of universities in the East Midlands. We've actually worked with 3 different ones in our area, which has proved really useful for looking at which sort of sectors we're sort of looking at and which elements of the business we're looking at. But definitely education and apprenticeships and schemes that we can get kids from school coming straight into business and doing day release is absolutely, I think, key, and we fully believe in that, and making that more accessible will be great for us, for where we are, not necessarily the apprenticeship levy, but looking at other schemes, definitely.
Excellent. Now, Laura, and Ian too, lots of manufacturers might be worried about approaching banks, and it can be a bit daunting. What are funders like yourself looking for from manufacturers in terms of information so that they can access finance? Laura, you probably need to go first, I think.
Yeah, I mean, I think Ian touched on this earlier as well. So I think, the main thing is explaining what a lender looks for, I guess, when assessing that funding application. And as Ian mentioned, the main aspect of that is the affordability of the finance, which is of equal importance to not just the lender, but to the borrower as well, to make sure that there is that financial stability for the longer term. And usually lenders will look at your historic performance, as Ian said, to give a good indicator of what the business could deliver moving forward. So I guess it's important, if your historic performance has been variable to date, it's again important to be transparent and explain that to the lender, because there might be justifiable reasons for that we can work with you to understand why that may have been. But equally, again, it's a case of, if your purpose of borrowing is going to help your profitability, whether that's to reduce your costs or increase your sales. So be clear with the lender what the rationale is with your investment purposes. So it could be that actually you're purchasing some new plant because you just confirmed a new sales order, which is great. Or it could be that you're, again, investing in renewable energy, which is going to reduce your costs. We can see that will be of a financial benefit to your business when we're looking at that affordability element. And I guess the other thing that we look at is just trying to match the funding to your need. So if you're looking to finance new assets, whether that's, a property or plant or vehicles, then finance secured by that asset, whether that's a commercial mortgage or asset finance, is often most cost effective, but also for the lender, it's a preferred way because of that provision of that security. And the term is then also likely to match the useful life of the asset. And I guess for working capital requirements, sometimes an overdraft might feel like the obvious solution. But again, you've got your assets such as your debtors or your stock, which could potentially be utilised as security to unlock working capital. So I think that's some of the things that we look at. Ian, I don't know if you want to sort of touch on some of the information that we utilise to help with our thinking there.
No, I think you've covered everything really thoroughly. For all product categories, all types of finance. I think the only thing I'll probably add is, so secondary to affordability and serviceability comes what's the sort of what's the level of security that's available. And obviously when it's asset finance, it's purely in the asset that's being purchased. And if it's cars and trucks and things like that, there's a ready second market. The values are understood, and therefore, it's really clear for a lender the degree to which its lending is secured or otherwise. When we're investing in often bespoke investments, particularly when it's robotics and automation, the availability of secondary markets to dispose of equipment, etc., is much lower. So we ascribe less security value to the lending, and therefore focus much more on the things that Laura talked about in terms of, what's the return on investment? What are the risks of this technology not working for this business? How thoughtfully have the principals, the directors, really gone into the project? But that, it's paramount that we are very positive when viewing that forward-looking cash flows and the ability of that business to service the lending when the security is not so strong. So we're really good at that, and we want to get better and better, because that's what's really going to unlock the growth. If all we ever did was lend on things that we were 100% secure or based on historic cash flows, then actually businesses wouldn't really get the finance they needed to thrive.
Yeah, that's a very good point. We're coming close to the end now. I've got a question for Fahim, which was basically, what's the most surprising findings from this research? But I'll just put my oar in first, which was, it was things like companies had not even heard of the Horizon program. The schemes that a lot of this is about ignorance. There are a lot of schemes out there. There's a lot of money out there. There's a lot of help out there, and lots of people who don't know anything about it.
Yeah, John, that Horizon stat was also a bit confused me a little bit too, because the Make UK as our kind of lobbying position, especially when we left the European Union, was to ensure that the UK had access to Horizon Europe, and then to do a survey that said 67% of manufacturers hadn't heard of Horizon Europe. Oh, well, okay, well, we need to now make sure they use it. And I think there is an issue for schemes like that, where businesses might often not know whether or not that is even for them. So Horizon Europe, I think sometimes people think that they're maybe just for academics or institutions, but actually, if you look at the criteria for application and who can apply to Horizon, it's actually anybody can apply for funding from Horizon Europe, as long as you're a scientist, you're in a lab, you're inventing something, and you need funding to subsidize that. You could be in your garage and you're doing it there, and you're an entrepreneur who's thinking of new ideas. You probably won't get it, but you could apply. You would be qualified to apply for Horizon Europe. So that was a shocking stat. I think the one for me as well that I found quite surprising, and it wasn't the £9 billion initial investment. I thought you'd think it'd be that one, but actually that was not that shocking to me. I think the 70% of businesses who said they wouldn't have invested was a shocking stat for me, because I had the view before the research that manufacturers just either maybe just didn't like finance very much, or they were very risk averse. And since the financial crisis, their mindsets had changed, and they're not necessarily very willing to engage with the financial sector. But then to say 7 in 10 businesses said, well, actually, if I didn't have access to finance last year, I wouldn't have been able to do the things that I did. And so that is a massive recognition and acknowledgement of what finance does, that you don't need to educate businesses into why finance is good for them. They already know. It's about now just closing that gap, the knowledge gap, and ensuring that they know how to access it, where to access it, who to talk to. And those are the things that we need to tackle. We don't need to tell them what finance is. The manufacturers are very well educated in that area.
Thank you very much. Now, I've got one final question, which is for Ian Isaac at Lombard. How are you integrating AI into your own business? And it'll have to be a very quick answer, I'm afraid.
Yeah, it's a really tricky question, right?
Yeah.
So two quick things then. One, in our own operations, we're trying to use AI to improve workflows and customer journeys. So take manual work, take manual overlay out of processes. So writing letters, handling complaints, managing workflows. So that's where we're experimenting in a range of areas there that should make the journey for the customer much cleaner and simpler. The second is in how do we use it to promote our lending more effectively. So how do we get better insights, better data that predicts what successful companies look like, rather than us just rely on getting under the skin of Helen's business and knowing her really well. What are all the data points in her peer group, in the markets, that we can put into some sort of machine learning tool and make quicker, more effective lending decisions? So those would be my two questions, two answers.
Thank you very much, Ian. Well, we've got to end there. Thank you all for answering those questions. We've been lucky, very lucky to have on our panel Laura Capper, Helen Doughty, Ian Isaac, Mark Swift and Fahim Khan. I hope you've enjoyed listening to them as much as I have. And if you also would give a big thanks to Carolee Summer-Sparks and her team at Make UK for making this all work so smoothly and clearly. Before you go, we'd like you to answer this short question again. How aware of you are of the potential funding opportunities available to manufacturers? Very aware, quite aware, barely aware, not at all aware. And if you answer that last one, not at all aware, we'll be very disappointed in this podcast. Remember, this is a Zoom webinar. It's been recorded and posted on Make UK's YouTube channel. Thank you all for joining us. As I said, we could hardly have picked a better time to do this webinar. If the government does what it says it will, investment prospects for you and the country should be about to improve. And we hope you've given you the information necessary to make that work for you. Thank you all and goodbye.